markets have never been more mainstream and more exciting. From the average retail investors to rich investors from the West, everybody seems to be bullish on India. The performance of our markets over the last decade reflects the enthusiasm for India. So, given all the excitement about India, we are starting a new series called The Big Picture, where we talk to some of the most smartest minds of the Indian stock markets. My name is Bhavya Dua, and in the very first episode, we speak to Deepak Shenoy, the CEO and founder of Capital Mind. In this episode, we dive deep on where the Indian markets are, the path ahead, the risks, opportunities, the budget, and a whole lot more. I hope you enjoy listening to this conversation as much as I did recording it. So, very warm welcome on this cold Bangalore morning on The Big Picture. And in today's episode, we're going to be diving deep into what the big picture of the Indian stock market is looking like at this current moment. And also, since we're speaking just before the budget, a big picture as to what the budget means for the Indian economy, on what it means for the corporates, and also, well, of course, for the common man. Or does it mean something? Let's go. So the first question before we dive into the budget and the economy, I would like to touch upon something about markets with you, because how can we not? So you recently made an analogy that being in the markets right now is like riding a tiger. How are you feeling riding this tiger right now?
I don't think you can explain how riding a tiger feels like externally, honestly. But here's the thing that I feel that you'll get it as an analogy. It's like, you're on a sort of merry-go-round, and the merry-go-round is going faster and faster and faster. And at some point, you realize that, yeah, if I get off, no matter what happens, I'm going to get hurt. That's what riding a tiger is like, because the minute you get off, the tiger is going to become away from your friend to your enemy, right? So it's a little bit like that. Because a lot of people don't know what it is to do this. And when the market reaches this phase, so they have either apprehensions on getting in, or if they're in, they're only wondering whether they should get out. This is not very meaningful from their own perspective. Because they don't know what, if you get out, you don't know when to get back in. You get so disturbed by the experience that you find that capital markets are not for you. These kind of things happen often, and in a time when markets are going up like crazy, you kind of feel that this is like riding a tiger. Except people who are riding a tiger don't know that they're riding a tiger. They think they're riding something really fast. So when you are aware that you're riding a tiger, then it's much better, because then you'll get hurt. It's like anticipation causes less injuries, right?
Well, according to them, they're riding a bull which is going to go up and up and up, and they don't know that they're actually riding a tiger whom they know nothing about. Am I right?
Correct. Yeah, they're riding a really fast or a really fast horse. They're like amazed at their own skills of riding the horse, because they think they're riding a horse, whereas there is some skill possibly in some cases, but a lot of times it's just luck that you're riding something that can run really fast, and that's it. It's like, but at the same time, I don't want to discourage people for doing this, because that's very traditional school to keep saying that, valuations are too high, don't get in, don't do this. That is a little bit of being an uncle, honestly. People have to learn, you have to fall. This is how you'll figure things out. Just don't borrow to invest in the market. Stay away from that kind of stuff. Don't do things that you don't understand. Simple. But beyond that, this is one of those markets which will teach you a lot of lessons, both good and bad. And you'll never be able to time the exact top. So it's like riding a tiger in the sense of it being inexplicably fast. The more you try to explain it, the more miserable you're going to feel. So everybody wants an answer. And I think that would be the more uncle part of things, where for somebody tells you this is the answer. There is no one answer. There are lots of answers. There's hundreds of ways you can make money in the market, and all of them are legit, and sometimes they're opposite to each other. Somebody will make money when the market is going down. Somebody will make money when the market is going up, and they're both fine in their own ways. You have to discover and find out who you are. So that means you are going to go have to go and experiment with doing things that you don't understand, thinking and trying to learn them more and more, whether it is buying small cap stocks or mid cap stocks. Most of the money is made in something called position sizing. How much money do you put behind each stock? You put too much money behind a stock, you might look like a hero because the stock may go up and then make you ₹1 million or whatever, and then you feel really good. You put posting screenshots on Twitter and all that stuff. But I mean that's like you don't even know it's luck. That's kind of hate you. Otherwise, you'll put all your money in a bad stock, you lose money, and then you'll go on Twitter and say, "Oh, markets are rigged and these people are stealing our money and all." But Twitter succeeds regardless. But the better way is perhaps to take the more diversified approach. You take a little bit of bets on a lot of things, and then a few of those bets to work really well to your advantage. You let your winners run. Let the remove the losers from your portfolio over time. You'll see some ups, you'll see some downs, but that's what markets are, right? You don't every day in your life is not an up, but by and large you've gotten more intelligent, you got smarter, you got fitter perhaps in some cases over time. That hasn't come over a day. So there'll be days when life is bad, you're feeling miserable, even the coffee doesn't do the trick. There'll be times when nothing seems to deter you and deface you, and you're feeling chirpy and happy all the time. But that's what markets are. One day you'll feel. So there is a saying that some days you're the pigeon, and some days you're the statue. So that's how it is. So if you're not willing to deal with that in markets, you shouldn't be in markets. But otherwise, deal with it like you deal with life. One day it'll be miserable. You'll be feeling miserable all day. You'll go home in the evening. You'll probably either have a drink, do some fitness thing. You'll get yourself cheered up by, I don't know, binge watching some terrible serial on Netflix. That's what I do. But otherwise, that's what life. You can't make this your life. The minute you make this your life, it's just one part of your life. It's a little bit of money on the side. Uh, the bigger money that you'll always make will be in your job, in your business, whatever you do in your real life. Your first crore comes from there. It's the subsequent money that kind of ends up coming from other places, but from your investments and all that. Because most people act as if all their money is coming from their investment only. I put 10,000 rupees here, it became bad. But 10,000 rupees, you guys will blow up on, like, I don't know, a shoe. So in comparison, it's like, you've made it your life when it shouldn't be. And that's the only uncle statement I'll make, is like, don't make it your life.
Well, maybe we can take that bit out as not the boring uncle advice, but that cool uncle advice who is telling you how you can make money in the markets and treat it as life, as you said. Take one day at a time, but not make it your life. Is that what the non boring uncle but a cool philosophy we can take out of this conversation?
Yeah, you'll get better at the end of it. We'll all survive, right? Most of us will, at least. And we'll all die. That's also there. So, it's very deep.
So, Deepak, tell me one thing. Everyone keeps saying that the markets are overvalued. Do you feel so too? And if so, then how are you investing in your own PMS currently?
Okay, so two things. Are markets overvalued by what mechanism? People think they're overvalued because they've gone up. I don't think that's true, because we have gone up a lot less in any one year than we have gone in the. I mean, this last 1 year we've gone less up than in the past. Many times in the past, there have been 60% here, 70% here. Right now, it's a 25% here at this point. Second one is, you might say, oh, P ratios, earnings to price to earnings is very high. Price to earnings is not very high. When looking at it historically, whether you look at mid caps, small caps, or large caps. Large caps, the Nifty is at 22 or 23 times earnings, not meaningfully high. Because 28 is high, 22, 23 is normal. Mid caps is about 28, 29, but 28, 29 was there before COVID also, so it's not like 28, 29 was high even then. And Small caps are actually doing even better. They're probably what less than that in PE. And there's an index as a whole. So there's always going to be some stocks that are valued at lower. So I don't think overvaluation exists as a market phenomenon, but it'll be at an individual stock thing. So some stocks will be overvalued. What we've learned in over time is don't sell because there's overvaluation. The only time you might want to sell is if a position becomes so big it's uncomfortable for you because you're over reliant. So we do that in the PMS often. It's reached 5%. Let's bring it down to 3 because we have 30 stocks. So I don't want some stocks to reach a 5%, 6% allocation. When I don't believe there is so much of a trigger going forward that will change things. Of course, if things change, they will anyway, kind of I can add to them. So you might do that. As an investor, I just buy into the PMS every month. I don't try to say that I'm going to time it appropriately and all that. So I just try whatever if I have free cash flow, that just goes and I just invest my personal money into the PMS every month. The PMS currently is about I think 95% invested. So we don't see when it's not apparent there's a reason, but it could come down anytime. So we have some algorithmic strategies that determine when you should go to cash. Some of them have probably started to show some early indications that there is use to go to cash, but it's so little. Like we are down 3% from the top. 3%. So it's not even useful to even think of this as a downturn. But I'll tell you things. First, the market is not overvalued, but if you feel it, it has never been useful to get out of the market just because you think it's overvalued, because it can get even more overvalued. So you get out when the market's falling, not when the market's going up.
Okay, so on one hand, you can't time the markets based on valuations, and on the other hand, according to the large segment, which you said you disagree with, the market is overvalued. So what does someone actually who is feeling queasy and confused about this markets do in this current scenario, do in this present scenario?
Very simple. If you're queasy and confused, take your money out, put it in FD and sit because money is irrelevant, right? In the end of the game, you'll lose some 3-4%. क्या होगा बाद में आ जाना I mean it's not like, so that's what I'm saying. If you make this something that is eating into your life, that's not what investments are for. They're supposed to earn money for you passively and all that. If they're making you make these decisions on a 1 month basis or 2 month basis, or ये market ऊपर चला गया कुछ तो करना चाहिए types, then don't do this. Take out enough money that you feel that it's okay. I'll take it out, I'll keep it somewhere safe, and I will be okay if the market continues to go up. So take out half your money, put it somewhere in FD, and say the remaining half will go up. So if I have 20 lakhs, I'll take out 10, I'll put it in FD. Then I'll feel less squeezy if the market falls down. But I will also feel less miserable if the market goes up because at least I have some investment in the market. And you can do that. It's just a psychological game. It doesn't change anything for you. But because you may be the first time walking into a business which has such volatility, you don't generally have such volatility in life, right? So it's not like somebody comes to you every day and says, कल तुम्हारा सैलरी कम होगा, and then 2 months later कल तुम्हारा सैलरी ज़्यादा होगा. Nobody comes and tells you this in real life. You're very stable real life people. So for the most part, we don't like this volatility. They don't like it when it goes down. So my funda is it's there. It's the attribute of the business. It's like I don't know. If you play any game, whether it's sports or whether it is Roger Federer had a fantastic statement to make recently. He said, if you look at all the points I've played in my entire life, I've probably won just about 50% of all the points I've played in my life, which means every single serve, return, everything that if you just took at a point level, he's probably done 50-50. But across the landscape, he has won so many tournaments, 20 something Wimbledon or whatever it is, 20 something Grand Slams and so many Wimbledon titles and so on. The point is he's won the right points. But if you focus on winning every single point, you will never get anywhere. That means you want to make money on every single trade, on every single day, at every single month. That's just time for misery. So you'll have some bad months. I'm sure Federer had his bad days, months, tournaments. But in the end you'll come back. The point about this business is sustainability. That means you shouldn't bet so much that you don't have anything to play with again. It's a series of games, and then you're going to make those bets over and over again. Sometimes you're just going to buy mutual funds and say this thing. But if you keep looking at the scorecard every day and say, "Aaj thoda niche ho gaya. I should have sold 5 days ago," you're just going to make yourself miserable on some of these aspects. So I would say, don't make yourself miserable. Sell to the point of not feeling miserable anymore. Then you'll be fine.
So, Deepak, why do you think the market is going up? And if I have to ask you pointedly, do you think this bull run will continue? And if not, then what would be the trigger that leads to a discontinuity in this bull run in the market?
So, this is maybe not, this should not be a secret, but it's something open. Markets are only designed to go up. It's a little bit like if you work and you do a good job, you expect your salaries to go up. Eventually, maybe not first year or second, but eventually you know that it'll go up. That's what markets are. So you're in a company, you've raised your money, you've done your good things, you've built a business. Then if the business is right, then the profits will come and they will go up, and stock price should go up. They're designed to go up. So the natural way for the markets is up. It is at some points where you have inflection points. Your business is not the one that is succeeding. Your competitor is succeeding. So you lose the game, they win the game. Your stock price goes down, their stock price goes up. What does an investor do? They move from you to them. So they cut their losers, they go to the winners, and then the winners continue. So by and large, there's always winners in the stock market in terms of business. So in that context, I say that stock, because stock markets only are designed to go up. That is the natural phase of the market. So you should think that if the GDP is growing by like 12% nominal per year, तो तुम्हारा market भी 12% जाना चाहिए. If it goes up more than 12, you're getting some kind of a bonus. If it goes less than 12, that means the bonus is going to come sometime later. But that's about how you should think about market. So the steady state is this 10-12% growth. And then everything is adjusted to that, right? The fact that you're 30% negative means that it could be a system-wide crisis. And system-wide crisis will last, but not last forever. It'll go away eventually. Even Japan, after 40 years, has found itself into a new all-time high. And before that, markets were crazy in Japan also. There were 12 years, consecutive 12 years of positive returns.
Right.
What I would say here is markets go up because of two things. One is earnings and one is sentiment. Sentiment is bullish, sometimes over bullish, because we like to, this thing, our companies and all that. But it's been bullish for a while, and results have actually showed that the bullishness was good. Was the good reason, because the PE ratio has not gone up meaningfully, right? So companies' earnings have actually gone up to meet those expectations. But at the same time, there is also the fact that when earnings have gone up, you should, in your mind, upgrade the index. So if I paid 100 rupees for a company that's earning 10 rupees, it earns 15, I should be willing to pay 150. Today, our problem is you look at 100 and 150 and say 50% increase. Kaun, Marla, why is the market is so high? But you haven't seen the earnings have also gone up so much. In 3 years, or I think 5 years now, the small cap returns are up 3x. Profits, the small cap index profits are up 3x. So you're actually seeing a 300% or 200% increase in profits for the small cap index. How much is the small cap index up? It's also up 3x. So in effect, you're paying the same multiple as you were 5 years ago, but we haven't thought about it that way. We say, oh, the markets are going up. But in reality, you're paying a different price for the same rupee of earnings over a period of time.
So you've been talking a lot about and even cautioned investors about the unpredictable nature of the current market. So, given that view, how can investors best navigate the short term corrections without being overly reactive?
Okay, first piece. We don't predict, we respond. I have this saying that I don't predict, just respond. You don't know the answers. So now it comes into when markets can be educative and markets can be entertaining. So the entertaining part is you can have any number of theories on why markets went up or will go up or will go down. I can tell you hundreds of reasons right now. Oh, China will attack Taiwan. Oh, Trump will come and change the whole thing. Oh, we will have government giving lots of free money to the poor. These are. I mean, you can never say no to any of this, right? Trump, China will attack Taiwan. Looks like it. Maybe. No, no, they won't attack. How do you know? I don't think you know. I don't. I am also saying China might attack Taiwan. So now the minute we're talking conspiracy theory, then lovely, you can just go the whole landscape on this. Okay, I could invent, oh, there was from the Mughal time, this was happening. All that stuff is there. So you move away from markets being a financial source of finance to a source of entertainment. And then any number of conspiracy theories can happen. What I can tell you is this: it doesn't matter what the reason is. Markets will go up or down based on something. Sometimes it looks like a really silly reason. I mean, somebody killed the Archduke of something, and then World War One started, right? Today, so many people are dying, and yet there's no World War anywhere. So it's not even like if something has happened in the past and it's caused a world war, that the same thing happening again will cause a world war again. So Russia attacked Ukraine, the whole Europe got on the side of Ukraine, and yet we have no crashes in the market. We're at all-time highs. Indian market didn't even react. US market reacted for a year and now it's back. Even though the Ukraine war is on, then there's an Israel war going on, there's something else. So you have geopolitical events of gargantuan magnitudes happening. Any of them can happen again and they can tank the market. You can't predict what will, but you know that something will. So, okay, whenever it does, you will get. It's like there's a party going on, and you know that at some point cops are going to come and stop the party. So you do say, I won't go to the party. Okay, don't go to the party. You won't have any fun. You won't, in this case, the equivalent is you won't make any money in the markets. But otherwise, if you do go there, then what are you going to do? You're going to keep saying, cops are coming, cops are coming, cops are coming. And then they come, you go. It's worst case you get hit is about 20-30%. And if you're not willing to take 20-30%, you're in the wrong business. You're in the wrong thing. So I think, don't try to make too many decisions there. When it's down 15-20%, make a decision on whether you want any more and you'll get out. Or even at 10% down or 15% down, take some of the money out and then move around, because that's the simplest way to do things. It's easy to say, but it's not very easy to do.
So, we've been talking a lot about managing the risks that exist, and how you can actually manage the two, right? So, when you're looking at assessing the risk return dynamics for investors in the current market environment, especially considering the factors like inflation and the geopolitical tensions that we discussed about, how can one actually do so?
Most investors have this risk return dynamic. मेरे को ऊपर में सारा रिटर्न चाहिए, मेरे को नीचे में कोई risk नहीं होना चाहिए. So it's almost like if it goes up, I want full going up. जब 15% गया तो मेरे को तो 15% चाहिए. लेकिन 15% नीचे गया तो मेरे को 0% नीचे. वो नहीं होगा. At some point, there will be khatta kheer and there will be whatever. They will.
Basically, everyone wants to enjoy the party as much as they can, but not go to the jail when the cops come in.
So you can't. At some point, you should find the way that doesn't take you to jail. It's obvious. But obviously, the situation is, let it happen. When it happens, it will hurt, but you can get away, because the biggest problem with getting hurt is this. Even in life, the biggest times of injuries are when you don't anticipate it. So every person who braces for a fall generally does better than a person who does not, right? So if you know that something is going to happen, you're automatically bracing. That means I have a plan. ये हुआ तो चलो 10% नीचे गया तो चलो निकल जाएंगे. We'll lose 10%, we'll lose 15%, 20%, but that's the max. I won't lose more than that. I'll take out my money at that point. And then I will continue my SIPs after that. So then let my money come back into the market in a more organized way. I know I will lose money even because the market could go down 20% and the next day go back up 20%. I know I will lose all of that. That is something, the risk that's in my head. But okay, that's the plan. It's the simplest way to structure yourself, saying I will lose some of the upside when it actually happens, but I can't predict the top. The same thing you can do on another side. You can sit outside and say, I don't care if the market keeps going up, I am outside. I will wait for the market to fall. Now you could wait forever. That's your risk. You could wait for another, say the market goes up 30% and then falls 20%. You're still thinking, yaar, main to, matlab, it has to come to my level before I buy. What? It won't come. Fir kya karoge? You don't have a. That's not a plan. That's like a prayer. So you would do better by saying, listen, let me ride it. When the waves, the tide breaks, I'll be out. I'll get hurt a little bit, but I'll be out. It's fine. As long as you're not doing stupid things like over leveraging yourself, playing into some crazy futures and options strategy which you don't understand, but somebody told you they're making 1% a month, तो मेरे को तो करना ही करना है, and then you lose lots of money and then you say, यार इतना रिस्क था, पता नहीं था. तो ये होता है. This happens a lot.
So we are basically theoretically coming back to the same point that people don't know that they are actually riding a tiger at this point in time, correct?
You should know it. That's the point. And if you, the minute you know you're riding tiger, you're at now top 1%. But 99% doesn't know. They don't even know there's a tiger around. They're thinking बहुत normal है, entitlement है. तो इंडिया अच्छा कर रहा है तो मतलब 15-20% तो आएगा ही आएगा types, But you don't get this. You don't get to determine uh, the money that you will make in markets simply because you don't get to. So there is no entitlement in markets. ये नहीं है कि कंपनी ने प्रॉफिट अच्छा बनाया उसका स्टॉक ऊपर जाएगा ही जाएगा. Because the default direction is up, but there's nobody who's the default. Everybody has some quirk or the other. So therefore, since there is no perfect man or perfect woman in that sense, everybody's imperfections leads them to different paths. And the same funda applies to markets. Your stock may be doing very well according to you, but not be doing very well according to the market. कर लो जो करना है, नहीं जाएगा ऊपर. और एक बार ही होगा, आपने स्टॉक लिया होगा, इट्स नॉट डूइंग वेल इन योर माइंड, बट मार्केट इज राइडिंग इट अपवर्ड्स एंड यू आर थिंकिंग क्यों कर रहे हैं, बट ठीक है ले लेते हैं. तो दिस is a constant. So given that, you should bet on the irrationality of markets rather than bet on the rationality of markets over a long period of time, more longer than many of us have survived in terms of being in the markets. 5-6 year periods, stocks come and reflect their true fundamentals. That means if your stock is doing a lot of profits, over time it will find its price. Just because आज प्रॉफिट बनाया कल प्राइस स्टॉक ऊपर जाएगा नहीं, वो that is a wrong assumption. But people don't have the patience. That's why I say these are uncle statements, because फिर क्या ही कर लोगे यार. मैं बोलूँगा 5 साल वेट करो. People are like, I'm 23, 5 years is like 20% of my life. I'm like, okay, ठीक है. I mean, it's 10% of my life. It doesn't change my view on it. So, but ठीक है. I mean, but I can't give those statements to people who to everybody, right? So maybe I have the patience to wait. And even I face the same problems. It's not like I don't see the markets and say कुछ तो profit निकालना चाहिए. But I also know that my experience tells me I'm always wrong in these things. So I stop myself.
So apart from this riding the tiger analogy that we've been discussing about time and again in our conversation right now, you also describe the current market as mad. So can you explain what specific behaviors or trends are leading to this characterization of the markets being mad currently? And is this just a temporary phenomenon driven by some specific events, or is it indicative of some structural issue in the market currently?
There's always a structural issue. India is growing. India is one of, in fact, India is probably growing better than most countries. So the structural issues are very, very solid. Uh, you are in, I don't know if you're in Bangalore. I assume, no. Okay. So Bangalore itself has changed, right? So much over the last few years. So I've been here what a long time. I've seen Bangalore 40 years ago, and then I've seen Bangalore almost. Although I never lived in Bangalore all the time at that time, but I've come to Bangalore almost every year for almost all of my life. So I've seen it evolve. Now I live here, so I don't see the changes. When so somebody from the outside comes after 4 or 5 years and say Bangalore's really matured, there's so much. So I'm like, kya yaar, nahi same. He's like, no, no, your traffic is not any worse than Bombay or in Delhi or anything like that. It's just that the roads are not much worse. I don't see it. He sees it from the outside. Right? So you're in the markets all the time. You don't see the changes. The changes are structural. People are earning more money. They're saving more money. They're investing more money. They're spending more money. So people are spending on things that currently are even listed in the market. So they buy from a Zodio, which has a listed something in the market. They use a Geo phone or a Geo SIM card. They use other products like cars and scooters and SUVs, and all of these things are manufactured by listed companies. They see profits. Those profits eventually show up in terms of growth, and then you kind of come to a point where you realize that a lot of this is actually structural. Some of it is just us going up the value chain in terms of amount of money being earned per person, reflecting in market valuations, reflecting in company profits, and all of that stuff. And it's that I think drives a lot of structural part of the chain. Plus, there's a lot of specific elements. So you might say something like, "Oh, India is spending a lot more on defense. The defense companies are local, not imported. So instead of importing defense equipment, we are going to manufacture that defense equipment here. So some of these companies are seeing a very, very big increase in the change in the cycle. And that is actually quite key to long term change uh, in the markets, because if you have a structural change, it will not be visible to you today, but it will be visible to you over a period of time. About 10 years ago, it used to be, I think, pressure cookers and paints and construction equipment and cement and all that stuff. Tomorrow, it's going to be technology and a bunch of things around that. We haven't got so much into technology yet in the top parts of the markets, but tomorrow it will be. And so today it's a bunch of other companies. There's the car companies, there is the power companies, the defense companies. There's a structural change in each of these areas. Defense is changing, power is changing in a big way. So that all the same problems that we saw in the past that made them unprofitable, that's turning into profit. So I think structurally India is a very strong story, but don't marry that to a statement saying stock price ऊपर जाएगा बस, because जाएगा, हो सकता है 10 साल बाद जाए, but we have to know that underlying there's a story. That's why you're buying this. That's why you're buying these stocks.
Okay, another thing that I'm going to take out from what you have been speaking about, tweeting about lately, is that focusing on winning stocks is something that you've been focusing on. And those winning stocks aligned with mega trends. So, can you elaborate on the specific mega trends that you are currently focusing on, considering the current economic and political landscape?
Okay, so I'll give you the lowdown on our strategy. So we say, okay, there's some things that are so we want to look at growth which is super normal. That means 12-13% तो हर कोई दे देगा. That's like buying Nestle because Maggie बिकता है. तो कितना ही मैगी खा लोगे टाइप्स इन द एंड, कितना ही आप सोप खरीद लोगे, कोलगेट, कितना ही टूथपेस्ट, इट वोंट इंक्रीज बाय मीनिंगफुली मोर देन पॉपुलेशन, मे बी 5-10% at the max. That's not super normal. But for a defense company whose orders were 1,000 crores a year, to increase that to 10,000 crores a year, that is supernormal growth. For a company that was manufacturing one ship every 3 years to manufacturing three ships every 3 months, that is supernormal growth. So these are areas, there are 4 or 5 areas. There is one is, of course, what we call import substitution. So the idea of defense, for instance, import mat karo, yahan pe manufacture karo, is an import substitution theme. And it's happening in a lot of cases. It's happening in semiconductors, where a lot of companies are being given incentives to manufacture here. And that incentive gives them supernormal growth. There is another area. So like import substitution has a big impact on manufacturing, and when you have an impact on manufacturing, you have an impact on machine tools, high end precision engineering. You have a lot of companies in that space whose primary business used to be exports earlier. Now it's serving the local markets. This is changing. The gearbox companies in these segments are actually seeing a significantly higher number of orders. Um, Apart from this, there is also a very large railway, road, and port and airport infrastructure part of the game, where the government is putting in some money, private players are putting in some money, but the upgrades are happening in a big way. So infrastructure is number two. If you import substitution and infrastructure, because here you have railways companies, you have logistics companies, you have companies that are using this infrastructure, and the infrastructure is not growing 1x 2x, it's growing 10x. Like in railways, they're going to add about 4x or 5x more trains, both passenger and freight, going forward, simply because there's some changes in our infrastructure which we haven't even, which we've been planning for the last 5 years, but 2024-25 is when it's actually going to be launched. So when they launched it, the stocks went up, but then people forgot about that. Now it's coming back. So that's one. Then you have something called energy independence. Basically, India imports a lot of crude oil. Most of that crude oil is used for petrol and diesel. Most of that petrol and diesel used in cars and vehicles and trucks and diesel generators. If we were to augment that by saying alternate sources of power, electric vehicles, charging infrastructure, power lines, power availability across the spectrum, you will get energy independence simply by importing less crude oil. And if you import less crude oil, the country will actually see a significantly lower current account deficit. The current account deficit is already, by the way, when we started doing this thought process, it was 1.5 years back. And in March, the current account has turned positive. There's no deficit, surplus. But that happens every once in a while. So it may still be a deficit for the next 1 or 2 years, but the deficit will be smaller and smaller. So energy independence is a real theme. You can play a lot of companies here down this theme. The layers around two more areas. One is financialization. So you like Zerodha has seen the biggest impact of financialization. People are saving money; they're investing it in stocks rather than buying real estate and gold. They're investing it in mutual funds. All of this stuff has just exploded, and it's not even scratched the surface because India has about 15% of GDP in mutual funds. America has 100 and something percent. So even Brazil has more than us, 25%. China has a little bit more, about 17, 18%. But in China, nobody trusts mutual funds. They trust real estate a lot more. So even they are higher than us, and we have a much more trustworthy democratic framework. So I think that's the fourth part. And the last bit is, the biggest thing that we talk about, our consumption, the clothes we wear, the cars we buy, the coffees we drink, everything is turning one level premium more. But India hasn't premiumized meaningfully yet. Anything more than this shirt, perhaps, or something at a higher level would be imported because the brands are there. We prefer because those have the quality, the edge, and all that. So we haven't yet built those high quality brands because the 50,000 rupee per meal restaurant has not happened in India. It's very common abroad to have even a $5,000 meal restaurant. So you don't have premiumization yet, but I think that will come. And that premiumization will come in different ways, whether it is um, people moving from chappals to shoes was one kind of premiumization. But within the shoes, when you move to higher level and higher category, and many of those brands can be built out of India as well. Then you have, people are trying. It's like the Manyavar is trying to get premiumized, and there's a few others that are trying to do things. But I think as domestic consumption flows, you'll see the premium usage of a lot of things, and almost everything that we consume, we used to import most of it. Because of the focus on manufacturing, a lot of people locally will start making these things and increasing the brand values. We take these five themes: financialization, energy independence, import substitution, infrastructure, and domestic consumption. These are our super normal growth sectors for the economy. That's what we call Surge India. That's our portfolio. It's done reasonably well in the last year, 2 years, 5 years. It's about 23% annualized over 5 years, 65% over the last year. But the point is, this is a evolving thing. So as more themes get added to the India story, we will add more of these stocks. And I think over the next 10 years, they should do very well in the longer term. If I'm biased.
Right, so you've expressed your optimism about the sectors that are contributing to more of the domestic consumption, infrastructure, even power, real estate for that matter, right? So, considering the recent focus on inflation, how do you see these themes playing out in the current market environment, even going forward as well? Do you think you'll remain optimistic about these sectors? And apart from that, are there any specific subsectors under these themes that you believe are currently undervalued and have a potential for a long-term growth despite the current market volatility?
That's a good question. There are no sectors that are undervalued, because by and large, sectors are reasonably valued in general. But you'll find that some areas, some stocks may be undervalued. So within financials, for instance, we have a big position in LIC. So while LIC has a bunch of stocks, there are a bunch of insurance companies. Some of them are overvalued. The sector itself is probably overvalued, but LIC is not, in my view. So I think there's a long way ahead in terms of that. So there'll be pockets of undervaluation in some cases, pockets of overvaluation in some cases, and that's okay. There's the other stocks which we own, which we don't know why they're trading at where they are, because they have yet to determine where they should be. So I think pockets of undervaluation, overvaluation will be at a stock level, not really at a sector level. It's not one of those times. Everybody's riding a tiger. So.
But Deepak, if I have to ask you that if you have to put your discretionary fund manager hat and look at the themes like PSUs, power, real estate, defense, and even infrastructure that have had crazy rallies, what do you feel? Is that going to continue? What are the kind of investments you're looking at when we talk about these sectors that have seen such crazy rallies?
I wish I could say yes, but I don't know. The answer is no idea if they're good. Like I said, don't predict, respond, right? Uh, जाएगा तो अच्छा है, नहीं जाएगा तो हम निकल जाते हैं. So we've been buying some of them anyways, because I mean, they're good companies. We think long term the earnings will be better. But necessarily speaking, we might be looking at position sizing these companies to a smaller level in some cases where the valuations are very high, and say, okay, we'll get into a bigger position size when the market's correct, or when these guys, when they demonstrate the earnings, because I'm not confident enough that the earnings are so good, so I'll get into a larger position size at that time. But these are just small technical, positions. So you kind of don't say, so never say things like I won't buy PSUs. These are like, there is a never say never wala funda in markets. You never do that, because uh, you don't know when things can change. You have to evaluate everything. The ugly duckling today may become a, smart looking duckling, I don't know, at some point in time. And so you can't write off a sector saying, I won't do this, I won't buy this looks too expensive. There'll be always some PSU bank that is cheap and another PSU bank that's expensive. So I'm sorry, there's no one answer to this. It's very boring, but the answer is,
So, every generation complains that this time is always different. But if we look at the current time, this is actually very different. A lot many things are happening at the same time, and the frequency with which the geopolitical conflicts are going up, that's like crazy. If you look at the politics in the major economies like the US or Europe, you can this can be easily like seen as reality TV shows at this point, right? So there's this potential of US China conflict as well, growing protectionism, even possibility for higher or longer inflation in a lot of economies. Correct? So given all of this, is it wise to be overly bullish for the next decade?
so I've seen this in 2004 to 2007 also. Similar arguments were made, because you had a Afghanistan war, you had Iraq war, you had something else, and all that stuff. I don't know if you remember, 2014 there was the Russian annexation of Crimea. There was in 2016 there was Brexit. There were volcanoes, there was something else or something. So there's something or the other that's always driving people to some kind of despair, regardless of when you look, right? So you will always find there is something to that could be a trigger for world extinction. So another way to put it is, on a long enough timeline, the probability of survival is zero. Uh, so you can always find a doomsday prediction at any point in time. So my funda is there will always be reason not to invest, but you have to take those calculated risks and then invest. Because in a time when nobody wants to invest, we won't even be doing this interview because nobody will be watching it. Because there will be like market मेरे को नहीं करना है. So it is a phenomenon that I think should you should think about as saying I need to somehow consider that when things go bad, I will switch my line of thinking, saying I've done enough, it's gone enough, then I can take the money out and put it back in an SIP mode, just for feeling good. To be honest, no matter when you invest, the returns for the long term, 10 years, 20 years, has always been great. May not be as great as if invested at the low of the market versus the high of the market. 1-2-3% का difference है. But it's not like it's bad. Even if you're the worst investor in the world, you've done pretty well for yourself. So you've done better than inflation. You've if you remove this, and I'll say this, it's a little bit of a old person statement, but if you see enough statements, no time is ever different. It's all the same, no matter when you look. 1999 they made these statements. 2007 they were 6 and 7 they were making these statements. Now they're making them. I don't think it's any meaningfully different. But 2005 say 2007 the market had doubled. Will you give up 100% return for the feeling that maybe it's run up too much?
Well, now I want to talk about the Indian economy. We've been talking about the geopolitical situations, what's going on in the US, in the China, how does the world economy currently look like. But if I have to ask you the big picture view of the Indian economy, what do you think it is? Both good and bad.
Good in some cases, bad in some others. There's this the overall sequence of returns depends on maybe some bunched profits. So your bunch profits may be, for instance, in defense. It's about the budget. The budget gives you an allocation. That allocation has to translate to this. So sometimes it just works in say 3 quarters from now. So you know that you'll get your bunch returns at that time. The markets will kind of plan it before. So you might get the market returns earlier, the stock returns later, and so on. But economy being bad is largely, I think, about people facing joblessness at different levels, especially in villages, because I mean, there's not nothing there. There's agriculture, and that's it. हमने कुछ create किया ही नहीं है, and any process of creating anything in the villages will take 10 years. You cannot easily start something. And then बहुत ड्रामा होता है इंडिया में. लैंड एक्वायर करने जाओ तो कोई लैंड नहीं देता है, बोलता है मेरे को तो रियल एस्टेट का पैसा और चाहिए, तो फैक्ट्री वाला बोलता है, नहीं लगाऊंगा फैक्ट्री, क्या कर लोगे. देन दे कंप्लेन कि जॉब ही नहीं है, फैक्ट्री भी नहीं है, लैंड का भी वैल्यू भी नहीं आ रहा है. You can't have all of them, right? So at some point, somebody has to give up and say, dude, I'll give my land so this factory can be profitable. If the factory is profitable, we'll all get jobs. And some people will make these realizations after a while. But today, when real estate has gone up so much, nobody is willing to go and buy some land somewhere, because even in some random village, this 1 crore per acre is what the demands are. 1 crore per acre is a lot. If you need 150 acres for a factory, then just to buy the land, before I even build the factory, I'm paying 150 crores. Why would I do that? I was going to get it at, say, 20 lakhs, 20 crores earlier. Now it's 150 crores. I won't do it. So आप कम करो फिर land का price. You give some sops, you give some these things, then only things will move. Then people get all, oh, nahi, farmland, you have taken, you have made some environmental this thing. But how will you get jobs if you're going to say that can't cut trees at all? You'll have to cut some trees somewhere. You can grow some more trees somewhere else. But of course, you'll feel miserable that they've cut trees. No, at some point, our outrage is also there. So these are things that we have to think about. I think this is the miserable part of the Indian economy. Is we are ruled by rhetoric more than we are ruled by economic returns. Sometimes it is bad economics to have pollution, for instance. There is no reason to have pollution. It's not like people like me will say, oh, allow these polluting factories क्योंकि बहुत पैसा बन रहा है. I say no, pollution is bad. It's just bad economically from a health standpoint, long term country standpoint. It's terrible. But you solve the pollution problem. But doesn't mean that you say ki don't industrialize at all, don't do this. That I think this kind of stuff will derail the economy in a different set of ways, and we're very prone to it. It's a WhatsApp culture that's driving a lot of decision making, and that's the unfortunate part of things. I don't think economically we are so badly challenged as we are emotionally.
Right. So what you have been mentioning and what you have mentioned previously is one side of what's going on. I think the Indian economy has cases of both the haves and the have-nots. On one hand, there are people who have some money and are earning and are continuing to do well and earn well, right? They want to spend on premium products like real estate, alcohol, electronics, to even small things like undergarments, right? But on the extreme, there's a vast majority of India that seems to be suffering. Agriculture is weak, like how we talked about the rural economy, right? And there's high unemployment and underemployment, again, as we discussed in the previous answer. On top of that, the cost of living is going up. So, how are you reading this situation currently?
Okay, this is a great question because economically the idea is this. Okay, the bridge between the haves and have-nots. So let's say you got the haves here, and you got the have-nots here. Our problem is we focus on the distance between the two, right? What we should wonder is, acha, if the distance has increased, does it mean the have-nots are in better shape than earlier? So if the have-nots were here and the thing was like this, the haves have gone up, but the have-nots have also gone up. So if you're actually improving lives at the bottom layer, the difference should not bother you too much. You will always have some people earning 99%, getting 99% in class. Doesn't mean that everybody should get 99%. It means that if you were getting 40 earlier and now you're getting 50%, theek hai. It's good for you. It's better for you. It's not like fantastic in terms of the 99. You can't keep, so you can't look at I mean, people are cribbing about this. There's a rich man whose son has a wedding and he's spending a lot of money on it. The crib is that he's spending so much money. I'm like, good, he's spending the money. What is he going to do with this? You can't die with his money. You just have to spend it. You spend it. It's local people that are making a lot of money. Would you rather he buy 40 Lamborghinis and literally makes the money than to have the money spent in India and local panwala and panipuri wala is also making money, right? So you want people to do that. The richer people should spend. That's how the money is made. You make India tourism friendly, right? And people will go to the villages. They will spend some time and money there. I think that's the way to spread the love and the money. But you can't individually say have-nots are not doing well, so focus only on the have-nots. It's eventually you have to focus on the haves and tell them you don't take their money out. For instance, if I give you a tax holiday, a tax break, instead of saying investing in your kids' education, go to a resort in a village and enjoy yourself, or do if you do that, you're likely to actually have more money spread around than otherwise. You'll see the difference is so crazy. Today for you 50 rupees is nothing or 100 rupees is nothing. You go to a village, 100 rupees goes a long way. And even 500 rupees, you think like, oh, 500 rupees just like a cup of coffee. For some people, 500 rupees is a week's worth of food. So if you spend over in those places, you'll give away 500 rupees like, "Acha, theek hai, whatever." But for them, it's like a living. And so you'll equalize things by just doing that, right? So I think that is the difference between the have. Of course, it's a miserable problem to have, but kya karoge? I mean, you can't solve it by saying take the money from the haves and give it to the have-nots. Kisi ka bhala nahi hoga. The person in the middle will make all.
So if I'm getting it correctly, you mean that we need to provide to the haves and not to the have-nots for it to trickle down to the have-nots, the haves spending and that trickling down to the have-nots. Do we not need to build a base level for the have-nots for the gap to be bridged sooner?
No, I think it's both. So you'll have to improve the performance of the have-nots anyway, because we don't have basic stuff, right? We don't have roads, we don't have sanitation, drinking water. You should do all that. Or infrastructure they cannot provide. The haves can somehow find electric generators. They can get RO tankers and all that stuff. But the have-nots don't have all that. So you need to do that for the basic part. You need to give them education for free and all that. That's definitely something you have to do. But you shouldn't say, okay, I'll give you free money. 6,000, 10,000 rupees a month. What's the point? Then they'll just say that, oh, this is enough for our lives. Chhod do. Then it doesn't change anybody's life. It just makes you. I think that's the problem we have. We equate the wrong solution to the right problem.
Like, if I have to ask you one to three things at this point that worries you about the Indian economy.
I don't know. I would say in general, most problems are expected problems. Downturns, inflation, lack of this thing. Geopolitical war. All of these things are complex. Have complex economic implications. But I think I am more worried about the direction of policy making. That we should actually be making long term thought processes, 10 years, 15 years. वो हो गया खत्म, वो नहीं करते हम लोग. Even our concept of 5 year plans. Who achieves anything in 5 years? You have to make 10 year plans. I want to get better primary education to all parts of the country. This is a 30-year plan. You have to think of each bucket as each 2 or 3 years as one bucket, and then kind of scale it from there and say in 30 years we'll have pure drinking water without the need for an RO to every household in the country. That is a 20-year plan. We did this with power. We said we will have so many gigawatts of power in 20 years. We are getting there. We did this with nothing else, and that is my problem.
So, given the economic challenges right now are tricky and thorny, the government can't really solve all of them, right? But what do you think, in your view, can the government do at this point in time?
No, they can do a lot of small things. They can. They've done this with infrastructure. They've put a 10-year plan in place. They've put a few things. So some things are happening. The railway upgradation plan was 4 years, 100,000 crores per year. So they thought about it at least saying, "Acha, ab karo aise." They have done this for defense. So I think they should do this for a lot of other stuff. Education, for higher education. We have very few postgraduate institutions of education in the country. We don't we don't we, we our skill development programs are highly understaffed and very very I mean there is no organized skill development system ecosystem for anything, carpenters, plumbers, good things where people actually earn a lot of money. I would say that is a fundamental attribute that we should be changing. We should be increasing the cost, increasing the focus on education and on healthcare to a point where some of these, although we've invested in private hospitals and private schooling and all that stuff, I think this should be a basic education, basic thing that the government should be providing. So if they focus on this, they focus a lot more on getting better, making better roads, yeah, better roads in cities and so on. I think you'll get a better, you'll get a better. This thing. I say this in without having a knowledge of what the government is going through. So they have tax revenues to balance it all out. But I should be thinking policy more than they should be thinking economics at this point.
So now let's shift our focus from the markets, the economy, a bigger picture view of these things to what's right in front of us now, the budget. Right? Let's have a big picture view of what the union budget after the general elections of 2024 is going to look like. So, if I have to ask you before diving deep into any of the technical questions or any of the expectations that you might have from budget, do you think it really matters? The budget really matters, or do you think it's just a fancy ceremony?
Fancy ceremony for the most part. A good place for entertainment, but yeah, most of the things happen outside the budget, anyways. GST is out of the budget. तो डिफेंस का आप कभी भी कुछ भी कर सकते हो. You don't have to worry about the budget. The budget is a broad statement of interest. So you actually have a fairly interesting 1 or 2 hours of conversation around, and everybody hopes और ये टैक्स कम हो जाएगा. And for 5 years टैक्स कम नहीं होता है. फिर कुछ तो हो जाता है. Then everybody writes about it for 2 days, then everybody forgets, because then next thing happens when tax filing is there. अच्छा वो deduction कितना था जो budget में बोला. So it's now more entertainment than anything else, but it's good. That's the way the economy should be. It should not be focusing on one day to determine the whole of the next year.
Right, right. But like in the light of the economic distress in the large segments of the nation, what are your budget expectations? Are you expecting any surprises, anything that the government might focus on according to you?
I just say keep business as usual. Keep you've got a big dividend from the RBI. You will get it next year also. So you can use this to plan a little bit long-term spending rather than something that you want to spend in 1 year. If you're going to think elections, then I'm not the right guy to give any gyan, but that is their vision. If they decide to do it, it can modify a few thought processes that we have. But if you stop giving impetus to industry and manufacturing, then it will be worse for the economy, and a lot of my core fundamental thoughts around India's surging growth will change. So I don't expect any of those to change. I think it's going to be a business as usual, very simple budget without any complex thought processes, and they will do the complexities later. They might say, okay, and they might for on a personal tax level improve the acceptance of the new tax regime where there are no deductions. So they should improve that visibility of that.
Right, so again, as before, I'm going to take something out from what you have advocated, mentioned, tweeted, right? So you have commented on the potential benefits of political stability. But do you think the current budget will have benefits of the political continuity, or will it face some changing dynamics due to a coalition government?
They will be, of course. Coalitions require people to make some compromises. But in general, it's good for the economy. I don't think getting a good package for, say, Andhra Pradesh is a bad idea, because they know how to spend the money in the right way. For the most part, they spend it on roads, they spend it on building new cities. I mean, that's great stuff for the economy. I think, you know, some of that will be not bad at all. Yeah, but yeah, of course, you tell me that, oh, they will take away from Karnataka and then give it to that. Then, of course, game change. But I don't think this is a bad. See, coalition. You are dealing with coalition politics, even if you're a majority. They did the farm laws, which were very good for the farmers, but one small segment of farmers protested. They had to go back on them, right? So a majority has no meaning. You're so having no majority or having a majority, if there's no difference, then you might as well be a coalition government.
Right. Would you be able to also like share some specific examples from the union budgets previously where some positive or negative announcements significantly impacted the markets? Especially if you're looking at the union budgets that came after the elections.
I don't know. The biggest announcement that we remember was when they removed capital gains tax in 2005. It was in an interim budget, 2004, and the market went down that day. So you can't expect it, and even if it comes, you can't expect the reaction the market had. So I would say I don't expect anything. So anything
Rationalization of LTCG or maybe some changes in the tax regimes?
LPCG doing this and all that. I don't. I mean, I think we should have a stable tax regime. You want to keep tinkering with taxes every year. It's just nobody can plan anything. I mean, half the year is over also, financial year. So you're sitting there and saying, "Oh, now you will change things. I've already done stuff." So you might as well do it in another time. I think tinkering with taxation all the time is like, I think it's going to happen. I don't think, I mean, all these small things will happen, but uh, in India, I think you should bring down taxes, not increase them.
Okay, so Deepak, before we wrap this up, the government is relatively in a better shape. Like, even though corporate tax collections are down, personal and direct tax collections are seem to be holding up well. And then there's a huge RBI dividend that the government has received recently. So, if you were the finance minister, how would you spend this money this time?
You don't actually have to spend it. You have a deficit, you might as well reduce it, right? So, one way would be to reduce the deficit for sure. Another way would be to reduce the way you change the way you think about spending and make it more economically viable. So, for instance, you could easily always generate, you spend so much money recapitalizing banks. You can always use that money to, uh, you know, invest money back into, you sell the bank shares that you own and then use that money to spend on different sources. And I would say, like I said, public infrastructure, healthcare, and so on. Healthcare, education, these are the areas where I think the government should have long term policies for and keep big budgets for. They should continue what they're doing on the budget. So if I was the finance minister, I'd probably just say, let's continue all of these things and let's add a little more on public infrastructure and healthcare. But politically, I'm not an elected politician, so I have no idea what goes on in their mind. So they're going to be like, nahi, nahi, free ka paisa do, maybe. If they do free ka paisa,
So, no focus on making the common man happy or the salaried class happy. That's not something you would focus on inflating the wallets of the salaried class this time.
I would cut the taxes at the highest end. Because at the lowest end, you're at up to 7 lakhs. There's no tax. So you might as well do the reduce the taxes at the higher end. So increase the slabs, make it instead of 15 lakhs, make it 25 lakhs. Spread the taxation around. Lower some of the capital gains taxes, or keep them in much more well-defined brackets. And then there are some instances over there where you have some weird situations. Dividends are taxed in the hands of this thing, but there are a bunch of rules over there that doesn't make sense. So you have to kind of rationalize some of those rules so that dividends are taxed either equally for everybody or not at all, whichever one makes sense. But you could tax them at a lower rate, or a different rate. You could tax business incomes at a different rate, which I think currently only is happening at a company's level, but it's not happening at an individual business level. So you should rationalize some of these. And I think tax compliance will only increase, not decrease, if you reduce taxes. So yes, I mean, rationalizing and bringing down taxes is not a bad idea. But that's what I said. You could, but either that or you could bring down the deficit by having this thing. But I know I don't think the personal taxation should be so high. We should definitely reduce some of the personal taxation. The elements, even GST collections are very high, but they can't control it in the budget. But I do think they should reduce some of the elements in there.
So, you mean to say the government post the elections won't have any surprises for the people?
Uh, at this point, I'd say, like I said, mid-year budget, don't expect too much. If it comes, it will be a surprise. I mean, they can be a big positive surprise or a big negative one.
All right, thank you so much, Deepak, for sharing those insights with us, for sharing your big picture view of the Indian stock markets, of the economy, and well, on the fancy ceremony that's going to happen in the next week. And thank you so much for taking out the time. Well, you said that you have been attached to Bangalore for the longest, for all your life. If not stayed here at certain points, then been here every year still, right? But it's my first time in Bangalore and I can see the lovely weather outside, the rain outside. So I'm going to surely go and enjoy my coffee post this. And I hope you have a great weekend as well. And well, thank you so much again for being on the big picture presented by Markets by Zerodha. Thank you.
Thank you so much, Bhavya, and good luck.
And well, that is all for now. But stay tuned for big picture conversations every week.